These rows of high-density server racks represent the physical entry price of the modern AI race. For years, OpenAI, Google, Anthropic, and Meta have operated on the assumption that winning requires amassing as much of this hardware as possible. The industry operated under a specific philosophy. Frontier AI required hundreds of thousands of specialized GPUs and a capital pool worth tens of billions of dollars. This created a trillion-dollar moat. The sheer cost of the infrastructure acted as a barrier that effectively prevented smaller, less funded players from competing at the top tier. Silicon Valley betting focused on a single variable. Whoever could deploy the most brute force and outspend the competition would eventually control the market. That betting logic was upended in a single day. As investors panicked, Nvidia's market valuation plummeted, which erased billions in value and sent a shockwave through the entire technology sector. This crash occurred without a single move for traditional rivals like Google or Meta. The catalyst was a software release from a small, relatively unknown Chinese startup called DeepSeek. The release forced investors to confront a new reality. Building highly capable AI might not actually require a $100 billion hardware investment. DeepSeek's approach stems from its founder, Lian Wenfeng. Before he entered the AI sector, Wenfeng built a successful hedge fund by specializing in quantitative finance. While traditional tech startups often use venture capital to solve problems through scaling, quants are trained to succeed through efficiency. They look for ways to extract the highest possible value out of the tightest mathematical constraints. This background shifted DeepSeek's strategy. They stopped trying to match the spending of American giants and instead focused on extreme engineering efficiency. DeepSeek faced a set of constraints that made this focus on efficiency mandatory. Strict geopolitical GPU restrictions and a fraction of the budget available to their American counterparts created a ceiling on their physical growth. Because they lacked the hardware, they were physically unable to play the brute force game. Their solution was algorithmic optimization. Instead of a dense, tangled web of processing nodes, DeepSeek rewrote the pathways for a lighter computational load. This architecture allows higher resource utilization, processing data rapidly even with limited hardware. In this case, hardware starvation served as a catalyst, forcing the team to find a lean architectural solution that the better-funded giants had overlooked. The industry saw the impact of this lean approach when DeepSeek launched its reasoning models under an open-source license. On performance benchmarks, results were nearly identical. DeepSeek matched the reasoning capabilities of advanced models from Google and OpenAI. However, the real story is the price paid. While performance is equal, the capital cost for American giants is orders of magnitude higher. Global developers quickly adopted the model, drawn to the combination of high-tier performance and drastically lower operating costs. The release demonstrated that a lean, optimized open-source project could bypass a moat that was supposed to cost $1 trillion to cross. The market reaction reflected a deeper anxiety than the arrival of a new competitor. It raised questions about the core logic of the industry's current business model. Analysts are now debating whether the incumbent tech giants are vastly overspending on AI infrastructure that might not be necessary. This puts pressure on closed-source companies to justify their high prices, especially when open-source alternatives offer similar capabilities for a fraction of the cost. The focus of the industry is shifting from a race of scale to a race of economic efficiency. DeepSeek still faces significant hurdles, including intense global competition, regional government restrictions, and concerns over data security that may limit its adoption in some Western markets. Furthermore, global demand for AI hardware will likely remain high. Even with more efficient models, the sheer scale of global AI adoption will still require massive infrastructure. Regardless of which company captures the most market share, DeepSeek provided a proof of concept that challenges the assumption that bigger is always better. The future of artificial intelligence will be decided by who builds the smartest systems, rather than who spends the most money, proving that disruption can emerge from the most unexpected places.